Our first panel dives straight into the backbone of the digital asset ecosystem, infrastructure. When markets move fast and systems are under stress, the resilience of crypto infrastructure becomes mission critical. Today's panel brings together leaders working on the front lines of trading systems, data, cybersecurity, and compliance. Please welcome panelists Jason Jung of CertiK, Josh Peshko of Talos, Marcin Kazmierczak of RedStone, Brandy Reynolds of World Liberty Financial, and moderator Ari Redbord from TRM Labs.
Good morning, everybody. My name is Ari Redbord. I'm the global head of policy at TRM Labs. We are a blockchain intelligence company. It was funny, I was talking to Cody earlier this week, and he said, I really want to make sure that butts are in seat first thing on Wednesday morning, so we're going to do your compliance and security panel at that time. So anyway, for those of you in the audience, thank you so much for joining us. We have actually an incredible panel. And I don't think I've actually, I spend a fair amount of time talking about these topics, but I don't think I've ever been one where there's every real layer of that infrastructure stack, that security stack. Really, how do we keep this ecosystem safe? So that's really what we're going to be talking about today. I would love you guys to sort of quickly introduce yourselves. Why don't we start at the end there? Brandy, you need no introduction in any compliance conversation, but do a quick one for me.
Sure, absolutely. Brandy Reynolds. I am currently the Chief Compliance Officer of World Liberty Financial. My background extends over 20 years in risk and compliance, with over 11 years being in-house as a compliance officer before diving into the crazy world of consulting. And now just really trying to focus on building infrastructure, compliance risk, and just really loving everything that the space has to offer.
Amazing. Josh, go for it.
Josh Peshko. I'm the Global Head of Compliance and Regulatory Strategy at Talos. Been at Talos for 4 years. Prior to that, I was at AQR Capital Management and JP Morgan for a combined 20 years. So the TradFi to crypto leap like many of us have done.
Yeah. Marcin.
Yeah, hey everyone. So Marcin here, co-founder of RedStone Oracles and Credora Ratings. I flew in here from Warsaw, Poland, so quite interesting to witness that you have a tornado every other week in Washington, D.C. I've been building Oracle's infrastructure to power data for on-chain finance for over 5 years. We have over 200 clients such as Securitize, BlackRock Biddle, Apollo, Acred, and many, many others, protecting over $6 billion of value on-chain. And we keep expanding this tokenization revolution on the data and the risk leg. Very glad to be over here.
Thank you so much. And Jason?
Jason Jung from CertiK. I've been with, as a Chief Business Officer, I've been with CertiK for about 5 years. CertiK, we're consider ourselves the largest security service provider in the blockchain industry, and we collectively have audited more than 5,000 projects and protecting over $6 billion.
Terrific. Why don't I stay with you for a second, and that is when you're thinking about security infrastructure within the crypto ecosystem, CertiK, you personally, what keeps you up at night? What are sort of the real risks that are top of mind for you?
Oh, I don't sleep. The crypto, as everybody knows, runs 24/7. So what we have seen is that the crypto security has evolved from a single isolated smart contract exploits to a more of a systematic attacks. It starts with the cross-chain, and that's what we think right now it's probably the weakest point, just because that all the bridges are building one on the other, and the protocol level securities is not really has not been really really deep dived into. Second is about a lot of the exploits right now is actually happening off-chain. Based on our analysis, last year in 2025, the most incidents are happening from the phishing rather than from a smart contract exploits. And third, it's about the speed. We all know that AI has been evolving very quickly in the past year or so. And while we're using the AIs to analyze the incidents or monitoring the transactions very quickly, but at the same time, the hackers are using AIs for exploiting as well, and that increased the attack vectors dramatically. So since we're we're in DC, and I really wanted to say that from a policy-making point of view, we're working very hard with the policymakers, the lawmakers right now, and just couple things three things that we want to emphasize. First is about the making the framework work. Second is about the policies, and the third is about really encourage the resiliency among this industry, helping the lawmakers, helping the regulators, our security providers, and also the industry to really have a lot of close talks and set up the framework for the future.
So many great points in there. It's interesting you mentioned AI, and we're going to get to a question on AI in a moment. At TRM, we saw about a 500% increase over the last year in AI-enabled fraud and scams. We see ransomware actors supercharging their activities with AI, but we also see it built, in some way, sort of in all these different infrastructure-related workflows. So it's this interesting moment. We've never seen anything move as fast in any of our lifetimes, I think, as we're seeing this, both for good and for bad. Marcin, we heard a little bit about sort of the protocol layer. Let's sort of go there. I have always believed that DeFi is the promise of this technology ultimately, right? Peer-to-peer value transfer at the speed of the internet, financial services on chain, but we got to keep it safe. Talk me through a little bit about sort of how you're thinking about that.
Yeah, great points, and we are going into the 20% markets like globally. So what an Oracle is a service that delivers the data in an accurate and secure manner to DeFi protocols such as lending markets, perpetual exchanges, synthetic stablecoins, and many, many other like primitives. You can think of an Oracle as this connectivity tissue between blockchains that are separated, right? Ethereum doesn't talk to Solana, doesn't talk to Avalanche, to Stellar. Oracles is this one piece that delivers the data to all of them to power smart contracts execution. So a smart contract is nothing else as a simple if bracket. If something happens, then execute it. So Oracles is this input layer to ensure that the whole system is working healthily and without any issues. And the most important aspect to measure an Oracle is resilience, accuracy, and robustness. Therefore, with RedStone, we put it as the absolute #1 priority. We've been operating over 5 years without a single hiccup, mispricing event, or downtime, which cannot be said about other competitors in the Oracle space because this is like the most important vertical for us. And to give you a very practical example, let's look at 28th of February, a couple of weeks ago, when US and Israeli struck in Iran. We saw that the event happened on Saturday when all the trading markets were closed. So where the trading was happening? Hyperliquid. We are an Oracle that powers many of the HAP-free markets on Hyperliquid, allowing for the price discovery over the weekend for crude oil, gold, and many of the other commodities. So we are actually the leg that determines when a position should be liquidated, when it's healthy, what should be the funding rate, and how the market should operate throughout these closing hours, so that on Sunday in the evening, when the markets open again, CME and all the others, then the market is going back to operational on the global scale. One really important aspect is also the liquidations on lending markets. Even a week ago, we saw on Aave, the largest lending market in the world, unrightful liquidations of $27 million because of an Oracle mispricing event by 2.73% in terms of the funding rate, in terms of the interest rate on particular tokens. So Oracles is the system that no one sees but hears about when something breaks. Therefore, it's a critical part.
Really fabulous answer. That was awesome. What has me so excited about this panel, quite frankly, is that we could be talking about DeFi, and then we can talk about how to protect the crypto ecosystem more within the TradFi, or at least that bridge between DeFi and TradFi. Josh, would you sort of get into a little bit of that, right? I mean, what we are seeing over the last year is, in my view, institutional adoption at scale in this space, which to me is actually the best story and sort of most exciting thing happening at the moment. Talk me through sort of how are we protecting that from an infrastructure perspective?
Yeah, to sum up infrastructure and what institutions need with their trading infrastructure, it needs to be resilient, but not just on the normal days. On the abnormal days, that's when it's the worst time to find if there's a leak in your roof, right? It's when it's raining. Right. So just to take a step back, the Talos infrastructure, right, is the trading infrastructure. If you come from the trading background, you kind of know this already, but the stages of price discovery, right, execution, settlement. So price discovery, find the best price for your Bitcoin no matter where it is, right? Bring that into one place and you can make that decision. Execution, for institutions, it's not like, a lot of us in here when we're buying Bitcoin, you hit buy, right? They do it smartly. So there's smart order routers to break up the order. There's TWAPs, TOPs, all different ways to execute, right? And then settlement is so critical, right? You want the asset, you have to give the cash, whatever it may be. That sounds simple-ish. It's very complicated at a global scale for institutions. And then you add the crypto piece to it, right? So you have 15 different counterparties all over the world. All of them have different API connections, different SEC masters. There's no standard kind of ISIN, right, or token, things like that on there. You have 3 custodians. You have, a 24/7 market, like you alluded to, and you have a really volatile asset around it, right? So you need your trading technology to be up. I think the biggest example for the need for resilient technology, there's a lot of them in crypto, as a lot of us know. But this past October, right, the flash crash we had, a lot of technology that was built in-house broke. It just did. And if you can't trade when an asset's moving 10% in a few minutes, that's a big deal, right? Whether you're buy side or sell side, it doesn't matter. It's a tremendous deal. So we have customers who had built something in-house and they were using Talos as a backup and things broke. And being able to kind of spin up a separate instance is so critical. And I'm not saying that as a sales pitch, but it really is more of an example of just how critical this is to your business. And the infrastructure provider you pick really needs to be able to be battle tested, right? To have lived through a lot and not just kind of built for today, but built for examples that you can't even think of.
Amazing. All right, Brandy. I'll tell you quite humbly, I joined TRM about 6 years ago after about 15 years in the US government, and I looked around the space and said, who could I learn from about crypto compliance? And Brandy is just quite frankly the foremost expert in the world on this topic. Super excited to be able to ask you this question. At TRM, we saw about 158 billion in illicit finance in the crypto ecosystem last year. That is a record-setting year. It's an extraordinary number. But what you really have to admit is the headline is the 158 billion, but the reality is that's only 1.2% of overall activity. So what we're talking about is 158 billion within an extremely growing and lawful ecosystem. But that 1.2% keeps me up at night, right? I know it keeps you up at night.
Yeah.
Talk me through sort of how you're thinking about mitigating that risk, even at a relatively low number overall.
Yeah, and to me, it's very basic, right? It's really understanding from the foundation up. Compliance must be integrated into the business, into every piece of infrastructure for the businesses. And so once you start there, as opposed to compliance being more of an afterthought, then you set yourself up for success. From that point, you have the ability to build risk-based controls. You can set up your compliance program. You can have appropriate governance and oversight and management. And then the business can also focus on ensuring that things are tailored for them. Because as you can see in the ecosystem, no 2 companies are different. No 2 controls should be exactly the same. And so that's where it takes a lot of time and attention, is to figuring out what works for those particular business models, as opposed to an off-the-shelf solution, excuse me. And so that, to me, is the very basics, the foundation of ensuring that what you have is risk-based and it's tailored for what your needs are.
Terrific. Let me go a layer deeper with you on that, right? I think something oftentimes, there's been this perception that, crypto is only used for money laundering. But the reality is that crypto is now used in the commission of essentially every crime. Why? Because people are using cryptocurrency more.
Right.
So when I think about ransomware, I think about DPRK-related hacks. We saw about 1.9 billion in DPRK-related activity last year. I think about terrorist financing. But talk me through sort of how you see the threat landscape out there when it comes to the use of cryptocurrency.
Yeah, and to me, so yes, the threat is there. And so just like with any financial institution, you're going to have what your vulnerabilities are. And so you have to be understanding of what those are. And so that's where I think that some in the industry, lose sight of the fact that those of us that are in risk and compliance, we understand that there are risks. And so what we're trying to do is we're trying to focus on what those are for our specific businesses. And so we are not pretending that there isn't the potential, but what we're also doing is utilizing some of those same tools that can on one side be a deterrent or can have vulnerabilities, then can allow for breaking up transactions and illicit activity with bad actors. But what we can do is we can use that technology to be able to digest large amounts of data for blockchain analytics and to deter and to actually report that type of suspicious activity and those bad actors.
Yeah, I think one sort of hopefully takeaway from today is as you're building, and I know there are a lot of builders here, this is foundational infrastructure, right? These types of security, compliance are absolutely critical when you're building, no matter how early you are. Jason, to that point, we have seen a series of very regular exploits within our ecosystem. Talk to me about sort of incident response and how you think about either pre or post exploit.
Yeah, so it's a war room. It's a very fast-paced, high-stake, but yet fragmented war room. Just because that most of the entities, companies or projects we see here are running globally, their operations globally. So I want to take through there are a few steps. The first is always about tracing back to where the exploits, discovering the exploits and then tracing back to where is it originated from. Second, it's about the containment, how to freeze the assets and how to mitigate from those incidences. Third, it's about remediations, and lastly, it's about social interactions and things like that. So it's we work with Bybit on their incidences, and there are many, many of those. And there are, coming back to again, I want to keep on reminding everybody that we're in the DC, so we should talk about the policies. And there are, I spent an hour yesterday talking with Congressman Sparks, and we always talked about it was that how we can settle about the how we should put regulations on the audits and how we should settle about the cross-border incident responses. And those are some of the really issues that the policymakers can help us to address. And yeah.
Absolutely. It's interesting. I wish we could trace our way out of all these sort of exploits, but the reality is we got to stop them from happening in the first place, or at least be super ready. Yep. Have the right team in place, have that lawyer as your quarterback, sort of really be ready to go, because there likely will be an exploit at some point. Josh, we are in Washington. I think there were like 50 lawmakers over the last, yesterday and today, truly, which is extraordinary. I've never been anywhere where there were more members of Congress, to include being in Congress, I think, on any given time. Talk me through sort of that piece, right? There is, regulatory policy. How should we think about policy making from an infrastructure, compliance, security perspective?
Yeah, so listen, we focus so much on regulation here in the U.S. We want it so badly, right? If you worked in compliance for long enough, we kind of know how to do it,
yeah.
Right? So the controls that we've been building in Talos forever, we came from traditional finance. It's the same sort of trading controls that you would get from regulation. Best execution, counterparty risk, kill switches, the algos that are running. They're not going to feel that different. So I think from our system standpoint, right, the technology and functionality's been there, and a lot of clients use it. Not all of them do, because they're not required to, right? So I think things that we take for granted in traditional finance, like having more than one counterparty, right? That there's a rule that says that. Nobody thinks about that as a rule, because it's the right thing to do, right? That one counterparty goes down, you're kind of screwed, right? Or if you're not getting the best price, there's no way you can prove you're getting the best price if you have one counterparty. So there's these kind of conjoining circles, right, of what's just the right thing to do and the best practice that the industry kind of comes up with. Traditional finance has had a long time to come up with that. All right, a lot of that still overlaps with what regulation is, right? So you do kind of take your orders from regulation, right? But I think as we mature, I think what we'll find is these things, a lot of it, it's just what is the right thing to do as a business. And I think that's why people like Randy and people who have been in compliance for a long time will know that naturally. I think there'll be very few things that come out from the SEC, and I know there's been a lot of news lately, which is really exciting, that are going to be kind of game changers about how, at least from the trading side, that people do business. They know how to do this in a compliant way, But codifying it is really important, I think, so you can truly apply for the license that you need and prove that you're complying.
Brandy, let me just kind of ask you that same question, because I think obviously this is an area of huge focus for me, is sort of like, what is the right approach from an AML perspective, from a regulatory perspective? I think the reality is that there have been rules in place for this for a long time. We've heard our industry described as a Wild West. This is an area where that's not true. Would you just sort of dig into the regulatory policy landscape a bit?
Yeah, no, absolutely. And so that's one of the biggest misconceptions that I do often hear, is that there is a lack of regulation, a lack of controls in the industry, generally speaking. When in all reality, there are many businesses in this industry that are regulated as money services businesses that are required at the federal level to be registered. There's also, for many, state-level licenses. There's requirements for AML programs, for sanction screening, as well as reporting suspicious activity. So for many, it's very similar to the TradFi space. It's just with a different component to it. So you're not dealing with cash and the same type of instruments. And so for us, it's just more or less, you're just adapting to the regulations that are already in place. But for us also, it's a semblance of ensuring that everyone understands what the requirements are, and that's for both the policymakers as well as for the industry, because there's always the need to understand where the guardrails are, and so that everyone can appropriately be on the same level.
Yeah, I mean, say what you want about sort of the regulatory landscape, but the U.S. Treasury does a really good job of providing guidance, but then also the enforcement actions are a great read. It's really a blueprint for sort of what to do and what not to do in the space ultimately. I promised that we're going to get to AI. Marcin, I'm going to let you kind of kick this off, but Jason or others, feel free to jump in here. AI is supercharging both sort of bad activity, whether it's exploits, whether it's financial crime, but it's also sort of in every workflow and every layer of the platforms we're all building. Talk me through sort of this AI moment when it comes to security, infrastructure, compliance.
Yes, from the Oracle perspective, AI is bringing the most innovation in terms of anomalies detection. And here I want to allude to one of the big events of the last year that many people maybe already forgot, which was 10th of October, the largest liquidation event in our history of this industry, where a lot of infrastructure players have shown that they were literally not prepared for that moment. With RedStone, because we introduced many of those AI detection systems, managed to accurately price Bitcoin, ETH, many other cryptocurrencies, RWAs, but also stablecoins. There were some platforms, really large platforms, that for a brief moment, like milliseconds, were reporting stablecoins priced at, for example, 60 cents. And for a price fee, that's enough to create a liquidation, right? Because then the health factor is below a certain level, and you just sell that position on the market, and there's no way back, right? It's done, it's already executed. So for us, this detection mechanism is extremely important, and I can give you a very practical example. I'm not sure if you follow, but there was quite a big mistake from Paxos, which minted PYUSD of $300 trillion for 30 minutes. That was just for a brief moment, but that's double the size of global GDP economy. And now, as an Oracle, we have to be able to detect that this is rather an anomaly. It's not something regular, because if we are to print that kind of information on chain, smart contracts are going to execute. They're not going to wait. They're not going to ask, hey, is it the actual number that you want to deliver? No, so that's the reason from the Oracle perspective is so crucial. And the counterweight to that example is when gold and silver were trading like crazy a couple of weeks ago. Our AI systems were informing us, hey, this is an anomaly. This is not happening on the market. It's way off the regular trading activity. But it was actually how traders were performing their execution. So we had to continue deliver that on chain. From tokenization perspective, we have two types of tokenized assets. We have yield-bearing ones like treasury bills, private credit, reinsurance, and the ones that people trade a lot. So commodities, stocks, FX. On both of those sides, the AA detection systems are crucial. But I would just finish with one thing. For me, even more exciting are AI agents. We are living in a moment when the two of the largest generational changes in financial systems are happening. One is tokenization of real-world assets. We all talk about it. But the other one is AI agents implementation. We see it at every corner of our life, and it's going to be no different in financial services. And what they're going to need to execute properly, data. So this is what we have been building for 5 years, and we are ready to deliver for those agents to execute seamlessly the transactions, balance portfolios, decide on allocations, and also we recently acquired a company called Credora, delivering risk ratings. Similar to Moody's or S&P, we rate financial products between D to A, which is going to be also a critical infrastructure for those A engines. And I will finish with an announcement. We are introducing today a new product called RedStone Navigate. We are experts in DeFi and on-chain finance, and we want to help financial institutions to expand there with tokenization products, vaults, stable coins, and many of the other DeFi strategies that are going to be just more efficient on-chain because the costs are lower and the markets operate 24/7, 365 days a year. So if anyone from you wants to discuss that from the institutional perspective, I'll be very happy to chat after the panel.
Anyone else on AI?
Yeah, just add to the agent piece, because
Please.
you brought this up. That's something that we're thinking about. So how does an AI agent behave, right? So we're used to dealing with like human users, like traders, institutional traders going through it. What's the difference when it's an AI? Is the process, is the flow different? What are the controls you need to put in place? How does an AI act, and when it's going rogue, how does it act, right? Where something like a fat finger might be a really useful control for a human, maybe not as useful for an AI, but there's other things that you might need to kind of move the toggles on so you can detect if something has gone wrong, right? You're putting a lot of trust into these agents if you're allowing them to trade, so you have to make sure that you're watching them. There's been countless examples in traditional finance around, rogue algos that have kind of blown companies up, and this is kind of no different than that.
Amazing. Jason?
Yeah, I think AI is definitely a double-edged sword, but whether you like it, the technology or not, it's coming, it's here. It's already developing. So it's about us, use the best of our talents in the industry to embrace for the new technology and beat the hackers.
Amazing, yeah. I mean, Marcin sort of brought this up, but this is what really resonates with me. I mean, we have built the largest data set of financial activity in human history, right? Blockchains. And what AI does, right, is provide really unique insights into data at scale. Mm-hmm. The intersection is just so extraordinary when I think about these two technologies. Obviously, we think a lot at TRM about sort of how to really use it in the tool, how to use it to understand patterns of illicit activity, how to track and trace funds. Brandy, how are you thinking about AI in compliance workflows?
Yeah, so to me, there's several different areas of focus. So one, it's being aware that AI is used by bad actors, and so having good technology is key to being able to help detect that. So it's no longer acceptable in the industry to say that you have manual controls in place to review suspicious activity. It's just not at this point good enough for most companies. Otherwise, we are also looking at we can use those tools to better suit us for transaction monitoring, like I mentioned earlier, the large data sets. But also what we're trying to focus on, to your point, was know your agent. And so that's a whole new level of difficulty from a risk and compliance perspective, because the natural ability for us to be able to know the behavioral patterns of an individual are much different than knowing those of an agent that's on the side of the keyboard, if you will, as opposed to you just conducting a transaction. And so us being able to get ahead of that and implement controls up front. Again, as we kind of mentioned earlier, it's not waiting until all this is rolled out and launched. It's being able to be on the front end so we can build out those controls early in the process.
Yeah, it's interesting. If I asked Jason what sort of keeps him up at night. I think what keeps me up at night is us not being able to keep up with bad actors who are leveraging this technology. Yeah. I testified before House Judiciary Committee on AI crime. And sort of my one big sort of takeaway for all of them was, hey, like we need to make sure that the resources are with law enforcement, with national security agencies, with compliance teams, because bad actors have already adopted this, and we need to make sure that we're using it as well. Right. All right, I'm going to do sort of my Tom Brady 2-minute drill here. Why don't I start with you, Jason? Look, like I mentioned, there's like 50 policymakers across the couple days here. If they were all seated here in front of you, what would you want to tell them about sort of keeping this ecosystem safe from an infrastructure perspective?
Resiliency. I think I hear this is exactly the same word from everybody here. I think this is what sets us apart from just AI, just a machine. So we can inject this kind of a spirit into the daily work we do, and we're going to win.
I love it. Resiliency. Marcin.
I believe those kinds of actions of Ethereum Foundation, for example, introducing a new standard called ERC 004 that they announced yesterday, a registry of AI agents, actually, the ones that you can trust, the ones that you can fairly clearly understand like how they operate, is something that should be promoted and should be also like brought from the government level. And they should also look a lot at the RWA leverage. I believe this is going to be one of the huge trends in 2026, as we are going to see more and more of those yield-bearing tokenized assets going on-chain. As I mentioned, reinsurance, private credit, refactoring, refinancing. People are going to use the on-chain rates versus the off-chain rates arbitrage to deliver like yield strategies. So they should look into that very, very much.
Josh.
Yeah, I would say, like, trust the industry, right? Which is a hard thing to say for crypto, but there's a lot of really mature players in this industry, right? That we know how to do things in a mature way, and there's not a need to kind of overcomplicate or kind of shut down communication. I think in the past few years we've seen a big change and shift in that, right? But I think we're all available to talk, and it's great to see the continued communication.
Amazing. Brandy.
Yeah, and so I would somewhat echo that, right? So I think it's a combination of engaging the industry and also the industry being willing to sit and understand and listen to policymakers and just have that open dialogue, because the foundations are in the industry. You can take a lot of what's already available on the TradFi side and you can adapt it to the DeFi world also. So it's just a matter of having those conversations and being able to come together.
Amazing. And I would say, look, we've never had more visibility on financial transactions than we ever have had before, which makes it uniquely resilient, strong when it comes to anti-money laundering, when it comes to stopping exploits, when it comes to working at the protocol layer. You don't need to over-regulate this space. We can leverage this transformative technology for good. That would be my takeaway. Guys, look at that. 0 on the clock. Boom. Thank you so much. This was an awesome discussion. And yeah, looking forward to more.
That's the accuracy.
Boom.
Thank you.